This is our Forex blog for August 24th, 2011, and we did some major changes to the software to reduce the number of extreme readings. You should see a lot less plus 80 readings on each individual currency meter, and so when you do see one, it's likely for that trend to continue. Now in this case, the pound, everything was strong, but the momentum wasn't there. And then around 6:30 here, you have extreme weakness followed by almost no strength. That weakness returns, which happens more than half the time, and when it does, when the real-time weakness is there and the intermediate term weakness is there, in a perfect world we'd have the daily, weekly, monthly trend all be down too. But now with the enhancements, when you have extreme weakness like this, you want to trade that against whatever's the strongest at 6:30 and especially 7. The CAD quite strong at 7. The intermediate time frame trend shifted up. The New Zealand was okay. I would prefer to find a pair that is strong on all time frames. Initially at 7, the euro dollar is. So you could look at trading and buying the strong euro versus the weak pound. Now notice the euro only stayed strong for half an hour, but we're going to look at this basically from 6:30 to 7:30. I'm not going to do too much range bars today. I mean, on occasion I might, but here's 6:30. The pound got really weak and the euro was really strong at 7, and you can see it went up. This pullback you bought, it went up. Pullback you bought, it went up. Because you're trading, a currency that's strong on all time frames, even though it had half an hour weakness here, half an hour weakness here. That's what causes the pullbacks, which allow you to buy in the direction of the uptrend. Another currency that was, relatively strong all day, except for its weekly trend, which is down. The monthly trend's up, the daily trend's up, the real-time intermediate trend's up, bar by bar trend's up, and it had a lot of real-time momentum today. Weak pound, strong Swiss from 6:30 onward, and take a look. Even if you sold the low right here, you can see it fell 25 pips. You might have gone short here on this next pullback. It fell 10-15 pips. So worst case scenario in that, you would have had a break even, pull back up again, and you have off astronomical trend here coming up towards 9. Notice how weak the pound is, and at 9 o'clock, the Swiss, actually before 9 o'clock, 8:55, it gets extremely strong. So you had 5 minutes to prepare for this. Actually, it was right here on this bar, the 8:55 bar. When it broke down, you go short, and you might, when you have one currency that's by far the strongest and one that's by far the weakest, you might want to draw your fibs on. And even if you got out the first fib target and not the second, you're out of this trade here at 58, short at 92 for a nice 30 pip profit. The new enhancements to the currency meter shows a lot less plus and minus 80 readings. If there is an 80 reading, it's significant. Like right here, the dollar intermediate trend shifted up and the real-time trend shifted up, and so this is more likely to continue. Whether it's for 5 minutes or an hour, you never know that. However, at 3, what was the weakest one? It appears that it would be the Australian. So let's look at from 3 to 4, because that's all that the dollar stayed strong at, selling the weak Australian versus strong dollar from 3 to 4. Now here's 3 o'clock right here. If you had sold the low of that bar, you would have been short at 75. You can see it pulled back 25 pips. Even if you sold the low of the range here, you can see it fell back about 15 pips. And here's really where the benefit of the range charts comes in. And I'm just going to quickly bring one up just to showcase this. Weak Australian, strong dollar. Now the dollar was not consistently strong all day. It just happened to be strong at 3. Up until 3, clearly the yen was quite strong. So selling the Australian yen from 1 to 3 would have been a phenomenal trade. Let me put this back here. For some reason, tick data is having trouble coming in. Here's 1 to 3, 1 o'clock right here. Weak Australian, strong yen, and you can see it pulled back about 25 pips. So whether you made 10 pips here, 10 pips, 10 pips, 10 pips, 10 pips, whatever. Whether you got in and held and made 20 or 30 pips, or got in and made 5 to 15 pips 2 or 3 times in a row, it was very clear. Now, another one that was extremely strong at that point was the Swiss. Weak Australian, strong Swiss. It's clearer than ever now. And as we scroll back to the 1 to 3 o'clock time, notice at 1 o'clock right here, it pulls back 10, 20, 30, 40, 50 pips. And on a range bar chart, you would have gone short here. There's probably an entry here. There's probably an entry here. You might have got into a small loss in here as it chopped around or out. You know, we use time stops. I don't go over them in class that much, but if the market's kind of going nowhere for 20, 30 minutes, just exit the trade. There's too many other opportunities to watch. So the CAD got moderately weak here at 2, and you can see less strength than weakness. Even if you missed the first wave coming up to 345 right here, it's strong. At 345, you know, a lot of the pairs that were strong are undergoing, you know, short-term minor weakness. But even that being the case, let's look at the dollar CAD at 345. You're looking to buy, and this one was only strong briefly. You're probably better off doing the CAD Swiss sell. I'm sorry, CAD yen sell. 345. Okay, so I guess that would have been right here. Alright, well, this is one of the few examples I showed today in class that really didn't go that far. It went down 5-6 pips, came up, came down, chopped around. It's hard to say whether you would have made or lost on this, but you wouldn't have lost more than 10 pips. More unlikely as it chopped around here. The CAD was, you know, no longer weak at that point. The pound was moderately strong from that point, so the pound CAD probably went up pretty nice during that time, 3 to 4, or I should say 2 to 4. It didn't go up that much, but it did go up 25 pips. The Swiss is strong. We'll take a look at the CAD Swiss sell from early on in the day. You can see that definitely pulled back a total of 50 pips. So, you know, there's many opportunities, whether you're a scalper, to catch 10, 15 pips, 10, 15 pips. You know, every once in a while you're going to find pairs that, you know, don't have that much volatility and do not move that much. So, you know, always check the ATR function of a given currency. If it's, you know, 3 or 4 pips per bar, you might not want to even trade it. This one's probably quite a bit higher, 5 or 6. This one actually moves 8 pips per bar on average. Okay, let's see what the CAD yen is. Only 4.6. Pound CAD. This one has decent volatility. It was choppy though for some reason. Can't explain that, but nothing works 100% of the time. Later today the CAD got really strong. It was one of the stronger ones, and we saw that the pound CAD was one of the ones that fell the most. The pound Swiss also, and even the euro, which was strong all day. But, you know, basically the new enhancement we put in there changes how we calculate the statistics on a bar by bar basis, and you should see fewer extreme plus 80 readings. And, you know, if you see a currency that's just mildly strong, less than plus 80, and some weakness comes in like the pound does at 630, the dollar wasn't the strongest one. It was better to really trade it against the yen if you're going to trade dollar or yen pairs. And you can see the pound yen absolutely collapsing. You know, you had that warning here at 630, which is right here. This one didn't really take off initially. You had a whole hour really before the move happened, and this one, you know, proceeded to fall 60 pips the rest of the day. So if you wanted to use the statistics from 3 to noon, it moves about 6 pips per bar on a 5-minute chart. If you want to bring up your range chart, sometimes if I leave it running overnight, it has problems, you know, getting the tick data. So I will bring up a new version of the software and try it. Oops. There we go, came in that time. You can leave two versions of the software running. And so from 6:30 onward, we're looking to sell this. You have a nice, beautiful little, wedge pattern where the volatility gets smaller and smaller and smaller until, it drops. Really on the range chart, the only trade I like is the first one here, or if as it's breaking down underneath the lows, that's not too bad. This isn't that much of a pullback, kind of gaps up here. You might go short right here, or when it breaks down underneath the low here with your stop above the bar's high. And usually, strong trends will move to where the Fibonacci profit target is. So you draw that on there, and that's your profit target. Look, to the pip. 125.60 was to the pip. Another trade, since it went sideways here for a nice 40-minute period, you might also have sold the low here because your profit target's 20 pips away, and it could go another 10 pips and hit the second fib target, but you don't know. So it's worth risking 10 pips to make 20, possibly 30. But obviously, the sooner you get into the trends, the more potential pips you have, possibly available to you. And when the currency stays weak like this the entire time, you have every opportunity to get into that currency. There's a real trend going on, and you can trade it against pretty much everything. You can see here when the dollar got strong again at 10, the pound dollar also after 10 o'clock was an exceptionally good currency to sell. Here's 10 o'clock right here, and all of a sudden, there was really no strength during 9:30 to 10, but the dollar had a lot of weakness. That weakness disappeared, and it continued. So whether you got into the trade here, this nice little 5-bar sideways range, it's just down, 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 and you again have the Fibonacci profit target off the last wave as an idea of where to get out. And even if you get out of your whole trade here at 90, you got short around 40, you made 50 pips. That's how you use our tools. And I made it even easier now because there's less false signals. In the past, these green bars probably would have given you a plus 80 reading, and you possibly would have got jigged into trying to buy the dollar. And now you can focus on where the real momentum is. It's clearly to the downside. Really until about here at 10:30, it becomes really strong. And these readings that become really strong now are much more likely to continue, as you can see here, the Swiss all day, the Australian, and so forth. So you should have a lot less, what I would call false signals, because we just improved our momentum tool.